This is Alan Bush with the Daily Financial Forecast for Thursday, July 26th. Starting out with the stock index futures, there were good gains, especially in the S&P and the Dow yesterday. News that there are now apparently reduced trade tensions between the U.S. and the European Union. So good news there, supporting the indices. Today we are seeing basically a mixed trade with durable goods coming in a bit on the weak side. Longer term, though, it appears that stock index futures are performing very well, advancing probably more than you would expect on bullish news and coming under pressure less than expected on negative news. So I think that bodes well for the longer term outlook for stock index futures. Moving over to the currencies, the dollar index coming under a little pressure and the euro currency advancing on news of reduced tensions between the U.S. and the European Union. Also today we had the ECB holding their policy meeting. At that meeting, no apparent surprises. They are still planning to scale back their quantitative easing program this fall. Longer term, though, it does appear that the dollar index may be a bit toppy in here, and it is likely that the euro currency, I think, will firm up from these levels, as eventually the ECB will move into some type of tightening mode, but probably not until the middle of 2019. Interest rate markets under some pressure, especially at the long end of the curve, as flight to quality longs are liquidated in light of a better tone to the trade situation between the U.S. and the EU. The probability of a rate hike at the September meeting from the Fed moving up a little bit to 93%. Yesterday it was at 91%. Also, not much of a bounce in the interest rate markets with durable goods, as we mentioned, coming in a bit on the weak side. So that should be viewed as a sign of weakness. Longer term, still looking for lower in the credit futures markets, especially in the 30-year bonds, as the U.S. economy still appears to be performing extremely well. Also, we have the GDP report tomorrow. The median estimate is for 4.3% growth. Some analysts, though, looking for better than that. Even the Atlanta Fed predicting 4.5% GDP growth. So that's a very good number. So once again, looking for lower across the board in the credit futures markets, especially the 30-year bonds. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.